Non-bank capital and its role. I can speak to this very intimately. I know it inside and out. And why is that? Because sometimes banks can't get out of their own way. They're stuck in the old way of thinking and always how they've always done things. They can't get out of that and evolve beyond it. So it's the old style of underwriting and not so centered all the time in your repayment ability. It's just a metric. Do we have just this debt service coverage? Do we have the unencumbered free cash flow to cover the debt service? If not, you fail, you're declined. And that's not how non-banks and these private funds think, especially in a time following when the SBA made MCAs, merchant cash advances, ineligible to be refinanced. These private offices, non-bank type lenders, they've been instrumental to helping clients just like you who's watching this. It's not always that we want to evolve and mature to become bankable. It's the maturation of bankability, like I say and continue to say. I want you to mature to get to the best bank lending in the nation. But when you're in between that conventional credit box or the old way of banking, viewing of financial performance, these non-banks can be fantastic. At times they charge more, they can. They do not always though. It could be a 13.99% fixed 5-year term loan that saves you tens of thousands of dollars by refinancing much worse capital, much worse capital. Now, there's also the bad non-bank people, and these are the merchant cash advance predators. These are lenders that aren't even close to a bank, but they might be having different capital sources. But it really doesn't matter the capital source is what I'm going to explain right now. It matters the packaging of the capital. How have they built out the term? How is the rate? How is the repayment? Is there a balloon? Is it very short term? You should never take a loan that's less than a couple of years, 24 months. And you really shouldn't even have to take that. The only time it's gonna be less than that is if it's a 12-month renewing, something that revolves, a revolving line of credit. So it's not actually 12 months, as long as you use it responsibly. So non-banks they're instrumental right now, particularly in this market, these non-bank lenders. And I've helped build programs with these capital sources and package them to be better than banks. Because why? We do not have the same red tape. We can think about things more critically and take into consideration the current market. That maybe, is it hitting a debt service coverage the same way it used to? And it gets into the fact that, well, what if someone's already servicing tens of thousands of dollars a month? Of course they could service a $5,000 a month payment. But the old banking way of thinking, if you don't hit a certain net with add backs, like we talked about in this course and will continue to, then you're declined. But you could pay it back. And so non-banks come in and they look at things a little bit differently, a different perspective. And they want you to perform. And of course, they're going to earn as a product of it. They're going to charge you interest. But non-banks are not a bad thing. It's important how the capital is wrapped. What is the term? What is the interest rate? Do we have any crazy ancillary fees we need to be aware of? You need to note that. Is it an enormous origination fee? Is there a consulting fee without the delivery of consulting, a monthly carry? Something that they're trying to, it's the guise of monthly consulting. They're not actually doing any consulting. They're just trying to increase without actually impacting the rate. So you gotta look out for that. Of course, non-banks and people that aren't banks and aren't as regulated could be bad actors. But I'm gonna tell you right now, in this current market, some of the best products are non-banks right now. They're gonna move quicker. They're gonna understand your business a little better in this market because they're not stuck in the same old way that they've always done business the last 100 years. So that's the nature of the non-bank world. And I am an advocate of private capital coming in and looking at things differently. We're continuing developing our own funds and having access to capital so we can distribute it because I know what you can repay. And much of our clients, many of them, are getting left behind by the way banking has always been done. So non-bank, not a bad thing. What's the wrapper? What are the terms? That's what's most important. And some of the best programs in the market right now today, the most efficient, are non-banks.
Learn the course for free at businesseligibility.com.